Well, I think they can read the writing on the wall with respect to the US dollar, and they are looking to replace their dollars with gold, to have more gold backing their currencies. Well, I mean, the correction, I mean, gold's 4,100. I mean, there's no correction other than the fact that gold got to, almost 4,400. But there's probably only been, I haven't counted them, but just a handful of days where gold's even traded above 4,100. So what happened is gold just had a big spike and then kind of retraced that spike. But, it's hard to say gold's in a correction when it's at $4,100, right? I mean, this is up until a month ago, that would have been an all-time record high.
Something massive is happening behind the scenes of the global financial system, and most investors still aren't paying attention. BRICS nations are no longer just discussing alternatives to the US dollar. They are actively building a new monetary order, and according to economist Peter Schiff, this is nothing short of a monetary war. Their weapon isn't crypto, bonds, or digital tokens. It's gold. With gold recently holding near the $4,100 level, silver showing increasing volatility, and central banks worldwide secretly expanding reserves, Schiff believes we are watching the early stages of a global transition away from the US dollar as the world's dominant reserve currency. If you own dollars, crypto, stocks, bonds, or even physical gold and silver, what's unfolding right now could directly reshape the value of your savings and investments in the years ahead. Let's break down Schiff's message and what it means for every investor watching this.
But I think the driving force has come from central banks. Now, maybe central banks didn't drive it up to 43.60 that week. Maybe that was some, spec money coming in finally off the sidelines, jumping on and then, getting slapped. But I think for the past couple of years, the move from 2,000 up to 4,000 was driven in large part by central banks. And why are central banks buying all this gold? Well, I think they can read the writing on the wall with respect to the US dollar, and they are looking to replace their dollars with gold, to have more gold backing their currencies than dollars. Backing one fiat currency with another fiat currency doesn't really accomplish much, but backing it by gold does. And I think the central banks have a lot of reasons to do that. Number one, it's political, especially after Biden sanctioned Russia. That was a warning to other nations. You could be next. So don't have a lot of dollars, don't have a lot of treasuries because, we'll use it against you. We'll pull the rug out from under you. So that was a warning shot that we never should have fired. I said it was a mistake when Biden did it. Number one. Number two, now that the deficits are $2+ trillion as far as the eye can see, now that we've passed the big, beautiful bill, which made the Biden deficits even bigger, I think it's pretty obvious to our creditors that we're never going to get our fiscal house in order. And therefore, we're never going to be able to repay the debts. So why own treasuries? It's either going to be a default or massive inflation. So better to get out now. So the fiscal situation is clear. Even the Republicans won't do anything about it. Even Trump won't do anything about it. And now I think the last thing, apart from the tariffs, which I think pissed everybody off and created another reason to get out of dollars, is the fact that Trump is now taking over the Fed, tearing down what remains of the pretense of Fed independence. He's packing the Fed with his cronies. He's going to reappoint a new Fed chair that'll be an Uber dove. And we got the Supreme Court decision on Lisa Cook, where the Supreme Court might strike down the very idea of an independent Fed as being unconstitutional and basically say, look, the FOMC members must answer to the president. There's no fourth branch of government in the Constitution. I could see them ruling that, the president has to be able to fire them because he's an elected official and they're not. And so, and it's not like the Supreme Court, because, you can't fire Supreme Court justices, but the Supreme Court is a third branch of government that's in the Constitution. The Federal Reserve is nowhere. In fact, a lot of times they say the Federal Reserve is the most powerful person in Washington. Well, then, but who's he accountable to? Nobody votes for him, right? So I think the Supreme Court may tear down Fed independence, which is going to be a problem because I think that's going to lessen confidence in the dollar. that we have a more politicized Fed, which is going to lead to a weaker dollar and higher inflation. Look, what is Donald Trump calling for? He wants massive rate cuts. That's bad for the dollar. That's bad for holders of U.S. Treasury. So I think the movement, the rotation out of dollars into gold is not only going to continue, but it's going to broaden. I think central banks that haven't been buying gold are going to start buying. I think those that have been buying are going to buy more. And I think what's really going to happen more next year is that individual and institution investors, they're going to start buying gold. They haven't been buying gold in decades. They're going to start buying, right? You look at Morgan Stanley recently came out and said that the 60-40 portfolio, needs an upgrade, and it should be 60-20-20, where it's 20% gold, and you cut your bond allocation in half, which is also a big problem for the U.S. government, because if foreign central banks are selling their dollars and U.S. investors are selling their dollars to buy gold, who's going to be buying all these bonds that the U.S. government is selling? The Fed is the only one left standing, but that means more inflation, because the Fed can only buy bonds if it prints more money to pay for them. And that just means more inflation, a weaker dollar, which drives even more money into gold.
Yeah. Well, they should have said it should stay 60-40, but then 60 shares and 40 hard assets, including gold. Just dump the bonds altogether.
Oh, yep.
And just to zoom in again on the central bank buying, I read this article in The Economist this weekend, and they tried to explain the gold rally, and they were mentioning all sorts of sources, including central bank buying. But then they said, if you look at the IMF reports, it's not even that much that they're buying compared to the total gold stock. But what The Economist completely misses is the secretive buying, right? Because we all know, especially in our space, that China has been buying much more than they're officially disclosing, and I guess that applies to many central banks.
Yeah, I mean, I'm sure, look, if you're a big buyer of gold, right, the last thing you want to do is let all the sellers know how much gold you want to buy or how much you've been buying, because the price will go up. So if you want to buy as much gold as possible at the lowest price possible, you're going to, keep your cards close to your vest so people don't know what you're up to.
Exactly.
So, yeah, I think that China probably has a lot more gold than it admits to owning. On the flip side, we may have a lot less. That's, because we haven't had an audit of Fort Knox in well over 50 years. And, even the Donald Trump administration early on, they were talking, yeah, we're going to audit the Fed. We're going to audit Fort Knox. We're going to find out how much gold we have. They haven't talked about that in a long time. They completely dropped that.
Why is that?
And, well, the skeptic in me is probably that maybe Donald Trump was told by somebody that that's not a good idea, because we don't have all that gold. And last thing we want is the world to recognize that, because that will be a big problem for us. Or maybe they need to get it back. Maybe they have it legally, but they've loaned it all out, and they need to get it before they do the audit. But the problem is, if the government has loaned out all that gold, what if they don't get it back? What if the people who borrowed it sold it short and they don't even have it anymore?
Yeah.
So who knows? I mean, because the U.S. government may have been selling gold secretly or making it available so to suppress the market. Who knows? But
like obviously in the 60s with the London gold pool, for example. But
if the U.S. government asks for its gold back, that means the people who borrowed that gold have to give it back. And if they don't have it, if they sold it, they have to buy it back, which will, of course, will push up the price. Right? They promised stuff to get votes. And Trump promised everything to everybody. Look, he promised no taxes on expats. He was going to eliminate the U.S. income tax on expats to get their vote. Right? He hasn't even mentioned that ever since he was elected. So those guys got totally screwed. He kept his promises to the Bitcoin community. But that enabled a lot of the Bitcoiners to cash out, which is, I think, what happened. There are a lot of people now that are hoping he keeps his promises on Fannie and Freddie. We'll see. That would be another massive mistake. But if he's more interested in rewarding his friends and donors than helping the country, then maybe they'll be able to try to pull that IPO off. But I don't know what he's going to do. I've said about a crypto that unless there's a U.S. government bailout of Bitcoin, it's going to collapse. And I don't know that Trump is going to bail out Bitcoin, even though his whole family now is, completely invested. But that's what people might be betting on. But the optics will be pretty bad, especially if they have to fill up the strategic Bitcoin reserve as a Bitcoin bailout fund. Like if they say we need to buy Bitcoin to prop it up, how could it possibly be a strategic reserve if it needs a bailout? The whole purpose of a strategic reserve is to use that when you're in trouble. You can't use your strategic reserve to bail out what you could claim is strategic and needs to be in reserve.
Peter Schiff argues that gold's recent surge isn't speculative hype. It's the result of structural change. He explains that the move from approximately $2,000 to approximately $4,100 was driven primarily by central bank accumulation, especially from BRICS nations, because they no longer trust the US dollar as a neutral reserve asset. When the US sanctioned Russia and froze its foreign reserves, other countries learned a lesson. If your reserves can be weaponized, they are not truly yours. Gold, unlike the dollar, cannot be blocked, frozen, or digitally erased, and that makes it a more reliable foundation for long-term monetary stability. Schiff warns that another major factor pushing nations into gold is America's fiscal crisis. The U.S. is running multi-trillion-dollar deficits with no realistic plan to reverse course. In his view, foreign creditors now understand the U.S. cannot pay back its debt honestly, only through inflation. That makes U.S. treasuries less attractive, and it explains why sovereign buyers are quietly selling bonds and redirecting into gold. Schiff believes this trend is accelerating, not slowing. He also points to political interference in monetary policy as a growing risk. If the Federal Reserve loses independence and becomes a political tool, with rate cuts forced to stimulate growth or markets, global trust in the dollar will weaken even faster. Schiff argues this shift has already begun, and the markets are starting to react. Meanwhile, institutional investors are catching on. Major financial firms now recommend changing the classic 60/40 portfolio model and replacing part of the bond allocation with gold, signaling a major structural shift in financial thinking. Schiff says this is only the beginning. Once retail investors, pension funds, and wealth managers enter the space, demand could rise dramatically. Gold isn't the only metal Schiff highlights. While gold is becoming the backbone of the new reserve structure, he believes silver may offer even greater upside potential because it remains undervalued relative to gold historically. With rising industrial demand and tightening physical supply, Schiff views silver as the leveraged opportunity within the monetary metals space, especially once the public realizes what's happening. Schiff's core message is direct. By the time mainstream investors understand what central banks are already doing, the price may be far higher. He emphasizes that this isn't just an investment setup, it's a global monetary transition. Waiting for confirmation means reacting late.
I think he's going to have to walk away from the whole crypto thing. Otherwise, it's going to take down his presidency all by itself. Because there's a big bubble in crypto. A lot of people are going to lose a lot of money. Some of them might blame Trump, but a lot of people are going to lose a lot of money. A lot of people are going to lose their jobs. There are a lot of people now that work in the crypto industry. They're going to be unemployed. Not only are they going to be unemployed, they're going to be unemployed and broke because a lot of the people who work in crypto are all in on crypto. They own crypto. That's one of the reasons they're working in it. So they're going to lose their jobs and their net worth at the same time, which is, a dangerous combination. Yeah, well, look, there's bubbles everywhere. That's what the Fed has been doing. They're forever blowing bubbles. That is the problem with the monetary policy. But yeah, I agree that we have a bubble in AI. I think the AI bubble is bigger than the crypto bubble. But the crypto bubble, I believe, is bigger than the dot-com bubble. So you're talking about some massive bubbles. When you combine them into a super bubble, I think that the main difference between the crypto bubble and the AI bubble is at least in the AI bubble, there's something real going on there. Just like with the internet bubble, the dot-com bubble, there was something real there. And some companies like Amazon, emerged out of that, right? But the vast majority, submerged permanently and went bankrupt. You got a handful of companies, eBay made it out of the originals. Priceline is still around. But the vast majority, 90+%, just, completely shut the doors and that was it. AI is real. I think AI, has even more potential than the internet as far as improving the quality of human life. And maybe not just the quality, but the duration, right? There's all sorts of stuff that if we can really have artificial intelligence and combine it with robotics, so it's not just mental labor that the machines can do, but skilled physical labor and just manual labor, then in the long run, we don't have to do anything, right? We'll just have whatever we want, and we'll have an army of machines that are smarter than us and stronger than us to do all the work, right? That's ideal society. We spend all our time on other pursuits, right? We do things that we enjoy. And of course, ultimately we'd wipe out poverty. So in the long run, this is a great thing that we've invented, and it has more potential than anything I think I've seen. The question is, how long is it going to take to fulfill that potential? And do a lot of the investments that are being made now in these data centers, are they even going to be necessary? I mean, it's like, who knows, how much more efficient things are going to be. Maybe we won't need all these GPUs. I don't know. And I also think that there's just a lot of money that's being, spent. And it seems to me like it's way ahead of itself. And I don't know how we can cover the finance costs, because we're spending a fortune. Where's that money coming from? Like, what aren't we doing in order to do this? There's not an unlimited amount of capital. And so if it's all going into building out data centers and all this equipment, what are we not doing? What is not getting funded that's going to be a big problem? And the benefits of AI may take 5 or 10 years or more to really start to show up. People think it's going to happen overnight. Things generally take longer than people think, even though the technology itself is very, very promising. So I think they're bubbles. I think both these bubbles could pop. The internet, the crypto bubble is almost a complete waste of resources, malinvestment. You'll have very little left. Maybe, I don't know how much demand there will be for stable coins. There'll probably be something for stable coins backed by, fiat currencies. I mean, I could see a role for those. I certainly see a role for tokenized gold, to the extent that you want a stable coin, you might as well have one that's stable with gold, because gold is stable. Fiat currencies are not. They just go down. Gold holds its value. So I think ultimately, and ironically, the blockchain winner will be gold. So blockchain isn't going to make gold obsolete. It's going to make gold better. It's going to make gold more efficient as a medium of exchange than it's ever been. So it's not the end of gold. Bitcoin isn't the end of gold. Gold's the end of Bitcoin, and it's the beginning. It's the beginning of gold.
So here's where we stand. Central banks are quietly reducing dollar exposure and replacing it with gold. Investors and institutions are beginning to shift portfolios. The Federal Reserve's credibility is being questioned, and the global monetary order is slowly, but unmistakably, evolving. The real question is, are you positioned for the world we've lived in, or the world that's emerging? If this breakdown helped you understand what's unfolding, hit like. It tells YouTube this topic matters. Make sure you subscribe and turn on notifications, because the next phase of this transition is already forming, and you don't want to miss it. Final question, do you believe gold will replace the US dollar as the backbone of global finance? Or will the United States defend the current system successfully? Drop your answer in the comments. I read them all.